welcome to the market alert for Monday, the 3rd of June 2019. So, the headline this morning, futures yuan tumble in early Asian trading. So, let's take a look and see what's happening. Find the Dow, and here we go. Let's have a look at the daily chart. You can see they are gapped down on the overnight. No surprise really given the weakness in the background. And also this headline as well, which I noticed this morning. We've got capitulation. Equity outflows in the past 6 months are now the biggest ever, as you'll see from this chart. I don't need to read all of the bits and pieces there. We just need to see what's going on. Let me just get rid of these adverts. Let's see if we can. There you go. There's the global equity fund flows, and you can see how the withdrawal of equities or from equities has fared over the last few months. So we're now below the 2011 and 16 level there as well. So this adding to the downside pressure in this market. So let's have a look in a bit more detail. So we've got the gap down. We know from past experience that the market likes to fill the gaps, so don't be surprised to see the market rally up here. So I'll come back to Friday's session in a moment. Let's just have a look here. You can see the gap there. You can see the market's already been retracing about 50% of the move there, and is currently attempting to move back to the upside as well, finding a bit of support here after the market broke through the minor psychological level there of 24,850. So I wouldn't be at all surprised to see this gap filled, because that's generally is the case when we get a gap. So on Friday, the Dow, we can just bring it all into focus there. We can see the market attempted to move lower. We can see them buying back in here at this level. This is going to be the 24,850 level yet again. And then we see prices trading up to the 200 bar moving average, closing back, and then from there it's downhill for the remainder of the trading session. Again here, just at that 200 bar moving average is always a nice area to short, as it is here as well as prices come back through. And like I say, at the moment I'm working on a few ideas around this to add. You can see here as well, once we below the 3 averages and we get these signals, again this is just adding to the downside pressure there. So the first trade not a winning trade, but the other trades you can see there the market moving lower. And also again, using what we're looking at in the market alert over the last few months, you can see how valuable this 200 bar moving average is, and that's because it's looked at by the industry as a whole, certainly within the trading floors in the banks and institutions. Let's just have a look, see if there is any news today. Not that the market's paying much attention to it. There's some manufacturing PMI at 3 p.m, but as we've seen for the last few months, the market really isn't taking any notice of the economic news. It's more interested in the political news. And speaking of which, looking at the pound, we'll start off with the daily chart. It's always good to look at the bigger picture. The market finding some support on Friday, and there is a bit of an increase in volume here, and the market attempting to get back above the 76% that it closed below on the downside, and is now trying to get back above there. Again, not a lot of volatility, but again, this interesting picture here with the 200 bar moving average. You can see that prices trading through this. You can see when they came back, they moved lower, and then we see prices reverse. We get the retracement, and then back through the 200 bar moving average. We had a slam down first, and then we saw the buying coming in and then moving the pound to the upside. And overnight, we just move the chart over to the left there. You will see that we are above the 200 bar moving average, and also the DP level there as well. So we're slightly bullish there. Watch the 76% retracement in the daily chart. And let's have a look at Bitcoin. So yesterday morning I found myself at the desk, and whilst I was here I was having a look at the Bitcoin market and recorded what actually happened. So what I did was mark up the 76% retracement, which is 2 clicks on the high of this with the retracement tool, just to see if the market was going to hold at this level and become a resistance, and prices move lower thereafter. So let me just fast forward, because there's about 10 hours worth of video here. So you can see that's the 4-hour chart, and I drew in 76% retracement off this as well, from this high to this low, just to see how the market would compare once it got to this level. So I'm going to fast forward. I then move down into the 5-minute chart, and then nothing happened for a couple of hours. I went back to the daily chart I like to watch the bigger picture. I think it goes back to the early days of trading commodities, when we only had daily charts, when there was no internet, and there's something about being able to step back away from the noise, which you'll see here. And then when things do happen, I'm just going to fast forward, you'll see there I saw the market going to the 76% retracement. The market then moved significantly higher in the intraday chart, and then you'll see later on the profit taking came in and moved prices lower. In fact, they came right back to where they had started earlier in the morning there, and then prices just traded sideways. But again, it's just to show you how important the 76% retracement is in this in the analysis of the markets, along with the 200 bar moving average as well. So let's jump back to the current picture for Bitcoin. And here you can see yesterday we moved to the downside with the profit taking. Just grab this and move it over a bit so you can see. And then overnight the market's been fairly sideways. But again, notice how the market picks up at the 200 bar moving average. You get a retracement, and then we're getting the lower highs, and we're getting a bit of a rounding off at the moment of prices in here as well. And in the daily chart you can see the 76% retracement became a resistance area. So what I would be inclined to do now is to remove this here, and then go from this low to here, and if the market breaks at 81.64, we can expect to see prices move lower there as well. And in the 4-hour you can see the 76% retracement and also the increase in volume. So we know the profit taking took place at this level. Okay, just before I conclude, let's just have a quick look at some other news. I forgot the implied volatility, 1884. The Dow, this has still got a bit more on the upside yet before it shows 100% increase. Could see a lot more volatility given, as you say, the capitulation in equity funds withdrawal, and also the early loss in the futures, but expect the gap to be filled there. The Treasury yield has now been updated, and you can see here how the market has gapped lower. This is of last week, Thursday and Friday, and we're definitely below the zero line now, and a definite confirmation of the inversion of the yield curve. You can see one or two other places here, but this is definitely below there now. And then finally, keep an eye on Deutsche Bank. This down on Friday, putting in a low here and here of 673. So heading down towards that 640 level that Charles Nenner spoke about. Let's see how the market goes today, and what could possibly happen if it does go down to 640. I've no idea. It's a forecast and a prediction that's been made. It's just an interesting one to see. I certainly can't see them letting this go pear-shaped very quickly at all, but you can see there is definitely something wrong at Deutsche Bank. The market doesn't like Deutsche Bank anymore, and the share price continues to move lower. As you work through here, you can see the impact. It's just continued to move lower, and certainly losing a lot over the last 6 months as well. We've gone from $9.20 to currently $6.73 with that low. Okay, that will do for this one. Like I say, quick summary. Watch the gap for the Dow being filled. The pound obviously still waiting for all of the political shenanigans going on down in Westminster, and Bitcoin struggling with the 76% retracement there, and the yield curve continuing to invert as well. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.